Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hello, everybody. Today is September 15, 2025. This is the Northbound Wealth Podcast. Market Insights. So stocks rise ahead of the Fed meeting. So last week, let's review it, and then we'll go into some other stock market related stuff. Stocks posted solid gain last week, riding a rally in mega cap tech stocks while overcoming interest rate anxiety, a downward revision to jobs data, and mixed inflation reports. The Standard & Poor's, which is also known as the S&P 500 index, rose 1.59%, closing out the week at 6,584.29, while the NASDAQ Composite Index climbed 2.03%, closing Friday's session at 22,141.10. Dow Jones Industrial Average added 0.95%, closing the week at 45,824.32. The MSCI EAFE Index, which tracks developed overseas stock markets, gained 1.18%. So stocks rose to start the week on renewed AI enthusiasm, with the NASDAQ hitting a new record intraday high. Stocks continue to push ahead on Tuesday despite fresh data showing large downward revisions to job creation for the 12 months through March. And by the way, this does happen every year, it seems, so it's not that surprising. The rally continued midweek after an unexpected drop in wholesale inflation appeared to boost investors' hopes for Fed rate moves before the year's end. Investors cheered on Thursday. Consumers, the CPI report, anticipating that the reading wouldn't be enough to derail a Fed rate move this month. The S&P 500 and NASDAQ posted record intraday highs and closes 3 days in a row, while the Dow Industrials cracked 46,000 for the first time. So all three indexes, that is important, are all hitting new highs. The NASDAQ hit a new record close Friday, while the S&P 500 flattened out and the Dow posted a modest loss on the week's last day of trading. Huge bull market rally I've been talking about for months, since April. All right, sector review. Technology stocks led the weekly climb amid better than expected quarter results and increased full year guidance for Adobe. That gave a boost to sentiment around generative artificial intelligence, or Gen AI. RBC Capital Markets said in a note to its clients, investors also increased their bets for the Federal Reserve's Policy Setting Committee to cut rates at its meeting next week, after data this week showed U.S. consumer prices rose more than expected in August. The Consumer Price Index rose by 0.4% in August, up from 0.2% in July, and representing the highest since January, the Bureau of Labor Statistics reported. A Bloomberg polled consensus was at 0.3%. However, core inflation was steady at 0.3% in August, in line with market expectations. The U.S. Producer Price Index fell by 0.1% in August, following a 0.7% increase in July, compared with the 0.3% gain expected in a survey compiled by Bloomberg. After excluding food and energy prices, core PPI declined by 0.1%, compared with the 0.3% gain expected and following a 0.7% gain in the previous month. Consumer sentiment in the U.S. deteriorated in September to the lowest level since May, according to preliminary results from a University of Michigan survey. Year ahead inflation expectations held steady of about 4.8% this month, while the long-run outlook climbed to a 3-month high of 3.9% from 3.5% in August. All but one of the S&P 500 sectors rose this week. Among the top gainers, technology rose 3.1%, utilities added 2.4%, energy climbed 1.5%, and financials increased 1.3%. Oracle had the largest percentage increase in the technology sector, jumping 26%. OpenAI signed a deal with Oracle to purchase $300 billion of its computing power over a period of about 5 years. The Wall Street Journal reported, citing people familiar with the matter, in utilities, Vistra, VST, and Energy had the highest percentage gains, up 12% each. The energy sector climb came as crude oil futures also rose. Top gainers included Texas Pacific Land, or TPL, up 5.4%, and Kinder Morgan, KMI, up 3.7%. The lone sector in the red was consumer staples, slipped 0.2%. The hardest hit stocks in the sector included shares of Constellation Brands, which is ticker symbol STZ, down 6%, as Barclays downgraded the beverage company stock to equal weight from overweight. All right, wide charts. Let's look at performance. Year-to-date trailing number, Dow Jones Industrial Average 9.73 to the positive. MSCI EFA 25.02. It's one of the best years I've seen in international markets in a very long time, probably decades plus. S&P 500 13.03% to the plus side, and NASDAQ Composite 14.68% to the plus side. That's always a good sign. Despite all the challenges this year, we've got double digit, basically almost double digit for the Dow, but everything else is up. So looking pretty good. The 10-year treasury rate is down to 4.06%. That's down from a month ago of 4.29% print and a 4.36%, 4.36% 3 months ago. So down, but still up on the 1-year change at 3.68%. Thank you, Wide Charts, for that information. Fed meets after mixed inflation reports. So all eyes will be on Fed Chair Powell this week. He's expected to outline his plan to adjust rates at the Fed's scheduled 2-day meeting, which ends on Wednesday, September 17th. Investors will be looking for insights on how he plans to guide the economy through this period of sluggish job growth and stubborn consumer inflation. This week, key economic data, you got Tuesday, retail sales, import price index, industrial production, business inventories, and home builder confidence index. Wednesday, housing starts, building permits, Federal Reserve interest rate decision, Fed Chair Powell press conference. Thursday, weekly jobless claims and leading economic indicators. Thank you, Investors Business Daily, for that calendar. This week, notable companies reporting earnings. We've got Wednesday, General Mills, Thursday, FedEx Corporation. And we've got the tax tip of the week, tax benefit and credits, FAQs for retirees. So lots of questions can come up about income taxes after one has retired. Some common types of taxable income include military retirement pay. All are part of pensions and annuities. All are part of individual retirement accounts, unemployment compensation, gambling income, bonuses and awards for outstanding work, and alimony or prizes. A few examples of non-taxable income are veterans benefits, disability pay for certain military government-related incidents, workers' comp, and cash rebates from a dealer or manufacturer of an item you've purchased. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. Stay tuned for the next segment. Hello, everybody. This is Brent Foster, and we're going to talk about the FOMC meeting that's coming up this week. They're meeting from the 14th to the 17th, and they should be meeting now. This is from JP Morgan's Economic Policy and Research Head, Michael Ferroli. I've listened to him speak before. I like his opinions. This is one that I happen to agree with, but he goes into the FOMC a little bit, and I wanted to share that with you guys. So at the conclusion of next week's FOMC meeting, which is this week, we expect that the committee, the Fed, will lower the funds rate target range by 25 basis points to 4.0 to 4.25%. We look for 2 or 3 dissents, which has to do that. What that means is it's the board descending or adding or saying yay or nay for a larger cut and no dissents in favor of unchanged rates. So for the interest rate forecast, or dots, they're referring to the dot plot by the Fed, we think the median for this year will continue to show one further cut beyond the expected action taken next week, which is this week, i.e., for example, 3.875%. There is a risk that this year's median will show 2 further cuts. We expect next year's median will foresee another 2 cuts before getting back to a neutral 3.0% in 2027 and staying there in the newly published 2028 projections by the Fed. We believe the post-meeting statement and Powell's opening statement in the Q&A will note the heightened downside risk to employment in justifying the expected move. We do not expect that these communications will give firm forward guidance on cuts beyond next week's meeting. With the dovish members dissenting, the centrists and hawks will sway in shaping the forward guidance. The case for cutting next week was laid out by Powell at Jackson Hole. By the way, that took place like 3 weeks ago, and reinforced by the August labor market report, which was a weaker number than expected. Inflation, while high, is expected to be transitory as tariff effects are likely one-offs. The downside risks to employment, meanwhile, have been rising. While this should seal the case for easing by 25 basis points, we don't see the committee going for something more aggressive. Relative to last September, the degree of labor market slack, as proxied by the unemployment rate, has been increasing at a much more gradual pace. And last year, in the 4 months leading into September meeting, core PCE inflation went from 2.9 down to 2.6%. This year, over that same stretch, core PCE has gone up from 2.6 to 2.9%. So I'm in agreement with all of that. I think that the Fed is likely to move on lowering rates by 25 basis points, potentially by 50 basis points by the end of the year, and maybe 2 times next year. I pray that happens. By the time the Fed gets economic and market data, it's already late because a lot of that data comes in lag. And so the Fed needs to think with their brains and stop being so bureaucratic and actually look at what's going on out there across all the different segments of the economy. And I know that they do that, but for the last year, it's been like, well, wait a minute, guys, like, why are we always late to the party here on actually keeping the economy going? Why do we have to sway the pendulum from one side to another? And then why do we have to play politics so much when it comes to monetary policy? I know it's a complicated job. It's very hard to look at all this data and then listen to a bunch of people talking all the time, and they're all have a lot of PhDs and things like that. But you're looking at a housing market that is absolutely jammed up. And the majority of Americans would sure like to get loans, move, transition, do what they got to do to live their lives. And the housing market is a segment that affects a lot of Americans, not just the top, but a lot of people, especially in America. And the bureaucrats, I would love for them to pay more attention to that, whether it's fiscal or monetary policy, like help Americans get into homes and move and transition and things like that. And one way to do that is to actually lower rates. Now, lowering rates isn't exactly great for the stock market per se. I don't think that's where there's tailwinds, but I also think it doesn't hurt it. I think the market actually will rally because of that. Pricing in rate cuts and easier economic conditions especially on debt instruments, and given that there's a lot of hard assets that have loans on them, that only helps. So it's just it only helps liquidity and people's personal profit margins, their personal balance sheets, things like that. And that also could mean that markets are going to get more liquidity to be pushed up higher because people will transition that or gear some of that money towards buying stocks or even going out and spending even more. And we are a consumer-driven economy. So I do think it's going to be stimulative in a way that it has been in the past. I also think that rates that are I don't believe in rates going to zero either and being so cheap that there's no real incentive. So to kind of have discipline and manage your balance sheet and your budget and things like that. It's just you don't want to create asset bubbles either by having rates too low and being too easy. During COVID, one of the worst things you could do is pump so much money into the system that you cause inflation, which the Fed and the Treasury did during that time, during those emergency measures. And I hope that everyone that was part of that learns through that. But I think it's going to be good, hopefully, for the housing market and hopefully for the stock market, and continue this bull market rally that's been going since April. All right, on to the next segment. Thanks for listening. I'm going to talk about a couple stocks: Google, Meta, Microsoft, VST, Broadcom, Amazon, NVIDIA, and Oracle. We're going to take a look at, as well as NVIDIA, Palantir. So we'll dive in to some of these names in our technical analysis spotlight. So first, let's look at Google's chart. And by the way, over the last 1 year, Google is up 59.43%. Year-to-date performance is up 32.46%. Let's see. The simple moving average on the 200-day is $181 a share. 50-day moving average is $202.48 per share. The 20-day exponential moving average is $224 a share. It's trading with a PE ratio of 25.65. Man, it's crazy. Revenue per share, $30.43. They basically have total sales of $371 billion. Pretty awesome, huh? It opened this morning at $244 a share. The prior close was $240.8. So $240. So it's up about $4 today alone. Earnings per share, 9.39 on volume of 36 million shares traded today. So far, looking solid. And Google, if you take a look at the 14-day RSI, you're trading in overbought conditions by far, but we're in a bull market uptrend. Those impulses can be rather strong. And then you've got the MACD that's up and was up even higher than what it is now. It kind of backed off a little bit, but is back up, kind of holding in today. Today is September 15th, trading day on Monday, and full stochastics, the 14-day, the 3, and advanced declines are all up above 80 in overbought territory. So you got overbought condition on the RSI, high on the MACD, and basically overbought there. Full stochastics looking good, and overbought condition, and then the advanced decline is fantastic and continuing to rise. So it looks like we hit about the 250 markers, 249.82 trading midday on Google, and definitely a bullish market trend is intact. I mean, it doesn't look like it's going to go anywhere. I expect at some point it'll consolidate, retest some levels just as a Fibonacci retracement. But the setup looks really, really good in Google. And hopefully you were in the stock like a lot of my clients were. They got to enjoy some of that because Google is one of my top positions as a firm. Okay, next chart. I said Meta and then Microsoft. Let's look at Meta, which is Facebook. Meta, it's up 46.23%. Year to date, it's up 30.8%. And it looks like the 200-day, see, it's currently trading at $757.47. The 200-day is at $656. Okay, so you're about $100 off the 200-day. To the upside, actually, the 50-day moving average is 742, and it's still trading above that. The exponential moving average on the 20-day is 752 and change. I'm rounding to make it easier on this podcast to talk about. 52-week range, 479 to 796. That's a big range. All-time high was $796 a share. And where it's trading at 757 is earnings per share of 27.61. Their sales are about $178 billion. Revenue per share is about $69.57 per share. Okay, so that's where it's at. There's a lot more I could go over from a technical perspective, but I'm using stockcharts.com to review my equity charts, as I always do and have for years. If you pull up a daily chart of Meta and have multiple studies overlaid, not only on price, on volume, but you've got RSI, MACD, full stochastics, and the ADX or advanced decline. what you'll see are, as of September 15th, you've got not an overbought condition, but you're right at the midline of the RSI, the 14-day RSI. You're at like just above 50. Now, usually as an indicator, you can't use this as a standalone, but when your indicator gets above 70, that's a overbought condition. When it gets below 30, that's an oversold condition. And when you're right in the middle, you're just kind of like looking at, do we have positive or negative divergence? And right now we have some positive divergence, and it looks like momentum is picking up. As I go down to the second study of the MACD, the 12, the 26, and the 9 on the histogram, I'm seeing that volume is increasing, and that's been increasing since the beginning of September, which is a catalyst for potentially a breakout of the stock going higher. The full stochastics are not quite in overbought condition. They are just below the 80 marker on the exponential moving averages for the full stochastics, which is kind of cool to see. At ADX, same thing. It's just beginning to curl up. And then you've got price on Meta at 764. So it was up from last Friday's close of 757. Now it's 764. And I'm seeing it holding above that 50-day moving average, and it looks like it's forming a cup. And who knows, cup and handle, we'll see. But it's definitely above the 50-day, building momentum, not quite overbought. And so there's potentially a setup for a breakout. And it's definitely a bullish price chart with volumes actually good and increasing on the day. All right, so that was Meta. It's a very good position within the portfolio and the book of business that I manage, and we like what Facebook is doing, and it's a quality company with great free cash flow. Same with Google. Next, we'll take a look at Microsoft. Okay, Microsoft's trading at $513.30 as of now. The open was at 508, so the prior close was 509.90. So the day's range has ranged from 507 to 514. So it's definitely in positive territory there. Now, let's review. Let's see. The last 1 year performance, 20.1%. So less than Google and Meta, but not bad either. Year to date performance up 22.45%. Looks like the 200-day moving average is at 445. And currently, again, like the stock's trading at 513. So it's definitely up above that. 50-day moving average is at 510, and the EMA, 20-day EMA is at 506 and change. So 37.38 PE. Total sales $281 billion. Revenue per share is 37.76. And the stock is just kind of cruising along. It's a behemoth, and it cruises along. It's pretty impressive what they've continued to do and have done over the years in transforming their business and the adoption across the world. Microsoft is definitely a leader in that space. 52-week range is 343 up to 554. So it's got a little ways to make all-time highs, but it looks like it's got a good setup on the chart. So if I pull up the RSI, it looks like it's around the midline on the 14-day. It's like just above 50. It's at 56.78. It was below, and it looks like momentum is building. The MACD is increasing. Volumes are increasing. Full stochastics are kind of jetting up. And the advanced decline ADX 14-day looks like it's kind of looking like it might want to turn up. We've got some data here that shows that, and I'm looking at the chart. I've got red line, green line, black line, and green is coming up, crossing the red. Looks like the black might be kind of hooking up as well. Then we've got the price, 513.44, slightly below, right at or just above the 50-day moving average. So it kind of lost ground there, traded below the 50-day moving average at the end of August, had a bit of a drop early at the very end of August, and then a pop right back up. So buyers came in right in that upper 490s to $500 level, and now it regained the 50-day moving average. We'll have to see if this is going to stick around and hold that 50-day. I think if we get a rate cut by the Fed, we might see that be a potential catalyst for more investors to come in and continue to buy the stock. It is definitely in a bull market uptrend and really hasn't looked back since April. It is fascinating. That run from 350, 345 all the way to 513 since April is literally like historic for so many of these big tech companies, and S&P 500, frankly, that recovery was fantastic as well. So we just covered 3 company names in this little segment. When I get back, I'll have a few more stocks to cover and talk through the RSI, MACD, full stochastics, and the ADX, and the price and the volume and the averages and where things are trading. We do own Microsoft. It is one of our largest, if not the largest position in our portfolios. It's pretty awesome. It's been fun. All right, stay tuned for more stock technical analysis spotlight. Thanks. All right, so we're going to dive into a few more company stocks on the technical analysis spotlight. One of them being VST, Vistra Energy Corporation. Vistra is an integrated retail electricity and power generation company that provides essential resources to customers, businesses, and communities from California to Maine. It operates a reliable power generation fleet of natural gas, nuclear, coal, solar, and battery energy storage facilities while taking an innovative customer-centric approach to its retail businesses. Its segments include retail, Texas, East, West, and asset closure. Let's see here. The retail segments engage in retail sales of electricity, natural gas to residential, commercial, and industrial customers. The Texas and East segments are engaged in electricity generation, wholesale energy sales and purchases, commodity risk management activities, fuel procurement and logistics management. The West segment represents results from the CAISO market, including its battery ESS projects at its Moss Landing power plant site. The asset closure segment is engaged in decommissioning and reclamation of retired plants and mines. So they supply excess power and power to, say, for example, Google and other big tech companies that rely on power generation. So you can see why their stock has done really well. Let's go over it. It's currently trading this September 15th at, let's see, $214.80 a share. 1 year performance is 152.62% to the positive. Year to date, it's up 56%. That's outperforming some of the other names we covered today. And then we've got the simple moving average. The 200-day moving average is 160, 50-day is 197, and 20-day EMA or exponential moving average is 198. It opened today at 209, and again, like I said, it is trading at 214, so it's up on the day and doing well. Let's see here. PE ratio 33.27. Total sales, $22.15 billion. Rev per share is $65.26. Sound familiar? In line with one of the other high-flying companies called Meta. Let's see here, but outperforming by big time. I think people are finally recognizing the need for power, data centers and the like, need for power. Okay. Earning EPS is 6.3. So for what that's worth, check it out. All-time high 216. And if you pull up a chart, relative strength, 14 days at 65. Not quite to 70, not above 70, but 65. So it's in between the midline and overbought conditions. MACD is pressing higher and is at 2.5 as far as ratio. Full stochastics 85. That's overbought condition. It's above that 80 marker, but looks like it still might have legs. ADX looks like it's trending up, trending higher. And it looks like we got a pretty big impulse move from the 180 mark intraday, like somewhere in there, 175, 180, all the way up to 214. So pretty big move since the end of August, early September. Probably going to hit up against those all-time highs as resistance, and then we'll see if that handle forms a little consolidation, then a breakout to go above that marker. So price target could actually get increased here in the near term as we watch the price action and technicals of Vistra Energy, or VST ticker symbol. Okay. Why don't we dive into NVIDIA? NVIDIA's got a bullish chart. Although today it's a little bit down. 177 is what it's trading at now. $177. It's up from the open at 175 up, but we'll see. The days range 174 to 178. 52-week range $86 to $184. All-time high was 184, so it's trading little less than $10 away from that. 166 million shares is average 50-day volume. Earnings per share, or EPS, is 3.51, if you think about that as you look at it. Over the last 1 year, it's up 48%. Year to date, 31.84%. And 200-day is at $140 a share. 50-day simple moving average 174, and then exponential moving average is 175. PE ratio is at 50.61, 50 times. Okay. This is what blows everybody's mind. You got 165 billion in total sales. Revenue per share $6.73. So just cruising along there. I won't even go into profit margins. They're crushing it on profit margins. So this is more of a technical analysis. So we're taking a spotlight at that. Let's see. We got kind of a negative divergence on the relative strength 14-day, trading at the midline. So 53.97, the mid is 50. So if you pull up a 14-day RSI, you'll see where it's right in the middle. It's not overbought. It's not oversold. It's right in the middle. Looks like MACD is steadily increasing since the end of August, and we're right at the middle line. Looks like increasing is good. That means we have some positive divergence there. Full stochastics, we had a big impulse move, and you can see it on the full stochastics, the MACD. So you're able to see the third wave. It's pretty substantial. And then we had a sell-off, so the oscillator touched 20 here at the end of August, September. Then we bounced up, popped above the midline, and we're trading around 65 on the full stochastic. Not quite to 80, so we're not in an overbought condition there on NVIDIA. ADX, advanced decline's been negative diverging, kind of steadily consolidating. I can kind of see this as a consolidation pattern from in a fib retracement from the last move from April, where it was trading at 85. It went all the way to 185 in a matter of months. Let's see, 1, 2, 3, 4, basically 5 months. Giant move from below the 200-day all the way back above it. Again, like I mentioned, 140 is the 200-day. It's way above that. Plus, it's above the 50-day. AI is a theme that is not going to go away anytime soon. And let's see, after that giant move, it had a consolidation from the 185 down to 165, so $20 a share. And there's a little bit of negative divergence, a little testing of the 50-day moving average from the top side, see if that is going to hold support. If it doesn't, it'll break down, retest that 165 level before seeing where it goes from there. My feeling is that based on this chart, looks like we're going to hang out and consolidate and then rebuild a base and then break out maybe even higher. As quarterly reports continue and guidance continues, I think lower rates, better financing options. I think the tech AI boom is in play, and NVIDIA's leading the way on that. So I don't think it's going anywhere anytime soon. All right, let's do Amazon next, and then we'll do AVGO or Broadcom. Let's see here, AMZN, pull it up. Currently, September 15th, midday, it's like 3:37 in the afternoon. It's trading at 230, 95. It's up a couple bucks today. It looks like prior close was 228. The open was 230, and it's trading around there. 52-week range is 161 to 142. All-time high is 242. Earnings per share on Amazon is $6.55 in earnings per share. 1 year return is 23.84%. So good, not fantastic over the top, but good for the behemoth that Amazon is. Amazon Web Services, key driver of that. Year-to-date performance, 5.27. I'd like to see that pop up. So last 6 months, it's up 16.67. So you see momentum kind of picking up over the last 5 days, a little bit of a pullback by 2%, but 214 being the 200-day moving average, 50-day is 226, exponential moving average on the 20-day is 229.73. PE ratio 34.82 and total sales 670 billion. Rev per share is $62.01. And just cruising along, let's look at the chart on the RSI. You got the daily chart up, RSI 14-day, right at the neckline, 52.59. So 50 is the middle again. We're not at 70. 70 and above is overbought, and then 30 and below is oversold, and we're right in the middle. And let's see, momentum, the MACD, the histograms, right, and volumes are right in the middle of where they normally are over the 12, 26, and 9 days. Full stochastics, you're sitting right at the middle. It's trading 47 and 53, right in the middle of that. 80 on the top end, 20 on the bottom end. Again, overbought is 80 or above, oversold is 20 and below. Advanced decline, looks like we've got the ADX at 14.36. So kind of on the lower end of that. It looks like it's kind of basing up, potentially got a wave going higher. Price and volume action has increased in latter days, was up actually in August. It looks like the stock traded from the 214-ish, 213-ish range all the way up to shy of 240, then pulled back to 230 where it trades today. 50-day move, it's been following that 50-day moving average on as it moves, grinds higher, ratchets higher. 50 days at like 226. So big impulse move from the April lows, tariff trip pivot all the way up to 240. So the lows are like below 165 all the way up to 240, basically pull back. And then reconsolidate, rebuild, and looks like pretty standard. Hopefully Amazon is a winner here as we head into holiday season. And I think that will be the case. I think they're in a bull market trend. The chart looks good. And we're going to go to the next chart, which would be AVGO. Haven't loved the stock over time, but you know what? I've grown to like it. I've added exposure for clients in this particular name as the AI and chip theme and revolution has a lot of tailwinds to it. Broadcom's going to be a beneficiary of that. The old days I call it AVGO. It's pretty funny, but this chart is definitely in a bull market chart pattern. Looks great. The RSI 14-day is in an overbought condition with a slight negative divergence at the moment. So it's above 70. It's at 71.99. So that would say, okay, it's getting a little expensive. Well, it can stay up here a while as the stock moves higher, but just keep that in mind if you're looking at the stock from a technical perspective. MACD is up pretty high, kind of some negative divergence there. It's kind of weakening on volume and momentum. That's okay, but it's something to watch. We've had a big pop in the stock since September. September, we were trading at 301, which is right at the 50-day. Now it's 365. So keep that in mind. Probably if you're trying to enter the stock, wait for a better entry point there. Full stochastics are above 80 at 85.38. So that's definitely an overbought condition. The ADX black line is at 30.44, which is pretty high, like moving up from it's a quick move at the beginning of September. So you see a lot of volume come in, you see big buying come in, and that all happened around the 300 marker. And that trend looks like it's in pretty strong established trend line. Man, in April, it was so low. It was below 150. Now it's 365. So that would have been a great stock to own. A lot of my clients did own it. I just was light on it and didn't see that one as well as I probably could have. Didn't really, management's got to do a good job, and I was held back by my issues with AVGO's management or Broadcom's management. But I've come around and I've added exposure right around and before that big pop. I started to add that, so I did get to benefit from that move a little bit. So I'm watching that as we go. Anyway. There are, let's see here. Did we cover most of them? Oracle would be the last one. I don't necessarily have a lot of Oracle. Frankly, it's an old tech name. And I get that they are cloud-based and they're good. I guess they're going to do a great job. I wish I was in this name, broadly speaking, but it's been a hard one for me to own. I mean, it was trading below 120 in April. I wasn't so sure of the theme and the idea that they were really going to be a big part of the equation. And maybe I'm wrong. I don't know. We'll have to see. This stock has had some volatility for as big as it is, but let me go back to performance. Over the last 1 year performance, it's up 86.89%. Year to date, it's 81.31. In the last 6 months, it's up 101%. So it's kicked butt. 200-day moving average is at 185. The 50-day is at 246, and the 20-day is at 258. Currently, it's trading at 299.68. It opened today at 306. The prior close was 292. So there's been some volatility. It popped and then it sold off. I bet that's people taking profits given how much it's moved. EPS is $4.32. The 52-week range is 118 to 345. PE ratio of 67.64. In my opinion, that's a bit pricey for Oracle. That's why I don't chase it into this. I will wait for a pullback or consolidation to some degree on a chart pattern. I'll look for fib retracement and see if there's a good entry point somewhere in there. Total sales, $59.02 billion. That is definitely up from what they have been doing. Revenue per share, 20.29. So they're doing a good job. They're making profits. They're kicking butt. They're taking names. And I need to examine this particular equity or stock a little more before diving into it. From a chart, though, let's take a look. Gosh, RSI, it was overbought conditions. It was nearly 90 before it sold off. It's at 66.29, so it's right up there at the top end of, say, an overbought condition. It didn't stay there very long. It was a bit of a spike. Now it's hanging on. I'll probably wait for these huge volumes to come down. The MACD is at 8.18. I'll probably wait for it to come back down below, maybe do a 2 or 0 or -2 on that one before looking at entry. Wait for the RSI to drop below 50 like it did back in August. Let's see, the full stochastics, if you guys are looking at all these on a chart, 70, it's right now at 72, 63, 72. I would like to see it down at 20 again like it was in August. And the MACD was at below -2. And the RSI was down in the 30 to 40 range. And the price at that point was, down in the 220 to 250. I mean, maybe we get some retracement that much. The advanced decline is certainly showing a positive trend. So I don't know if we'll get that. We'll have to see. The trend line sitting there, maybe down at the 250 level for the 50-day. Maybe that's where I look at entry. We get a little consolidation in Oracle, but it's definitely a bullish chart pattern, and the theme is behind it. So FYI on that one. All right. I think I went over enough stocks in our technical analysis spotlight. I've spent some time on this. We've covered a plethora of stocks that I think are interesting to not only clients, but to folks out there who are listening to the podcast. And I hope you found this enjoyable. And until next time, you guys keep on trading, keep on having fun and investing, and always be buying, allocating appropriately, and setting goals and running budgets. And I wish you guys all the very best. I'll talk to you guys here in the next week or two. And have a great week and weekend.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.